You're lucky if you could buy $70 silver, but I wouldn't even wait for that because I think the supplies of silver are going to start to run low and the premiums are going to really start to blow out. You caught the whole thing just buying over the weekend, which is what I urged all the listeners or viewers to the market wrap to do when I recorded a week ago. And I'm going to give out the same advice, and that is don't wait for Monday. In fact, this Monday is Martin Luther King Day. So if you're going to wait for regular trading to resume, you're waiting for Tuesday. Don't wait. I think we're going to have another huge move up on Sunday night, Monday, Tuesday to beat the herd or the crowd. I recommend that as soon as you are finished listening to this market wrap, you go right to Schiff Gold, buy more gold and silver.
Peter Schiff is once again sounding the alarm for precious metals investors, urging immediate action as silver and gold markets heat up. According to Schiff, waiting for $70 silver may be a mistake as physical supply tightens and premiums threaten to surge. He highlights how weekend buyers already gained an edge, warning that delays, especially around the Martin Luther King Day trading pause, could mean missing a major breakout. Schiff predicts a strong upward move starting Sunday night and accelerating into early next week. To stay ahead of the crowd, he advises investors to act now, emphasizing gold and silver as critical hedges in an increasingly volatile financial landscape. Now, we present the clips from Peter Schiff's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
But by the time they wrapped up trading for the week, gold was only down about $20 and silver was down about $2.25. Now, silver's been a lot more volatile than gold all week. But the important point is that the volatility is taking place at these very high prices. And this is just another consolidation of this big breakout. So if you're thinking about looking for a big pullback to buy silver, think again. The opportunity to buy $50 silver is long gone. Right? And you're lucky if you can buy $70 silver, but I wouldn't even wait for that because I think the supplies of silver are going to start to run low and the premiums are going to really start to blow out so that even if silver goes down, the price of silver coins and bars may still go up. And in fact, most of the move on the week this week happened on Monday. You caught the whole thing just buying over the weekend, which is what I urged all the listeners or viewers to the market wrap to do when I recorded a week ago. And I'm going to give out the same advice now. And that is don't wait for Monday. In fact, this Monday is Martin Luther King Day. So if you're going to wait for regular trading to resume, you're waiting for Tuesday. Don't wait. I think we're going to have another huge move up on Sunday night, Monday, Tuesday. So to beat the herd or the crowd, I recommend that as soon as you are finished listening to this market wrap, you go right to Schiff Gold and buy more gold and silver. If you own gold and silver, if that's the money you save, then everything is going to be cheaper. The price of everything that you need to buy will be less expensive if you have gold and silver to pay for it. I mean, that's one of the reasons that I'm setting up T-Gold because I want to enable people to have a currency, have money that will buy more over time, not less, right? You don't want your savings to erode in value before you have a chance to spend it. You'd like your savings to grow in value so that when you go to buy something, you can actually buy more than when you set the money aside. That's how money is supposed to work. The longer you wait to spend it, the more you're supposed to get, right? That's capitalism. That's how it works. It's socialism. It's central banking that has perverted sound money and given us constant inflation. But anyway, I want to leave you with these words again for the long holiday weekend. Don't wait for Tuesday. Just go out and buy some more gold, some more silver as soon as you finish listening to this weekly market wrap.
Peter Schiff warns investors not to wait for a pullback in gold and silver, stressing that current volatility is occurring at historically high prices. He believes the opportunity to buy cheap silver is gone, with physical supplies tightening and premiums set to rise. Schiff notes that major price moves often happen after weekends and holidays, urging investors to act before markets reopen. Emphasizing sound money, he argues that holding gold and silver protects savings from inflation and preserves purchasing power in an unstable monetary system. Let's get back to the interview.
Again, gold stocks are different types of investments than physical precious metals. There's a lot more inherent risk when you own an operating business that is generating a profit. I look at gold and silver as a store of value, long-term, safe haven. Gold and silver mining companies are risky businesses, right? I mean, there's so many things that can go wrong when you're operating a gold mine. But the upside potential dwarfs the downside risk. And in fact, I think today was a great day for the gold mining stocks, because when gold was down about $70 and silver was down $4, these stocks were all getting killed this morning, down 3, 4, 5%. Some of them, I saw one silver stock that I own was down about 8%. Now, it ended up positive on the day. But why are these silver stocks getting hit so hard when silver is $90 an ounce? None of this makes sense. Yes, gold and silver stocks have tripled along with the price of gold and silver, but their profits are going to go up a lot more than triple. These stocks should be much, much higher. The reason they're not is because Wall Street still doesn't understand what's going on. And remember, there are really two different buyers. Wall Street, where they buy stocks, they're not buying the physical metals. They're looking at stocks. And they don't understand why gold and silver are going up. And they don't expect the prices to keep going up. In fact, they don't expect the prices to stay up. That's why they've been so reluctant to bid up mining stocks and adjust their future earnings forecasts for higher gold and silver prices. In fact, they're still assuming that gold prices in the future are a lot closer to where they were in the past than where they are right now. Now, indication that maybe that's changing was the action today, because even though gold and silver finished down on the day, most of the stocks recovered all those morning losses and finished positive on the day. They all didn't finish positive, but many of the stocks that I own not only finished positive on the day, but made new multi-year highs on the day, despite gold and silver being down. And what I've been saying is that these sell-offs are irrelevant to the value of these gold mining companies. Gold could go to $3,000 and they'd still be cheap. So what difference does it make if it's $4,600 or $4,500 or $4,300? Doesn't make any difference at all. Gold stocks should be going up every day at this point, regardless of the short-term fluctuation in the price of gold. That has no bearing on what these companies are going to earn now or in the future, and probably even more so with these silver miners, given how much the price of silver has gone up. And again, as I mentioned on my last report, very few people seem to understand that gold companies also mine silver. It just reduces the cost of their gold. And now their costs are going to collapse because the silver byproduct that they're mining when they're looking for gold is now so valuable that it is dramatically reducing the cost of mining gold. But I think the action I saw today is a little bit constructive in that maybe, just maybe, Wall Street is starting to figure out that gold and silver aren't going to crash. And eventually, they're going to realize that they're going to keep going up. And they're going to keep going up because of the fundamentals. And the fundamentals are getting better and better for gold and silver with each passing week.
Peter Schiff explains that gold and silver stocks differ from physical metals, carrying higher risk but far greater upside. While gold and silver serve as long-term stores of value, mining companies are operating businesses whose profits can surge as metal prices rise. Schiff argues Wall Street still underestimates future gold and silver prices, keeping mining stocks undervalued. Despite short-term metal price dips, strong recoveries and new highs in mining stocks suggest the market may finally be recognizing improving fundamentals and long-term growth potential. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.